Good morning, guys. Welcome to this Thursday, February 27th. And so yesterday we got the Nvidia earnings. So far it was beat and beat and beat, and the market didn't, it was a pretty violent reaction, but it was up and down, but not in the really directional. So um, that was a good one. So that was a big concern if that would have been a big rundown in the pre-market in the post-market. In the pre-market now they're still looking pretty good. So that reaction is, we'll see how it goes here throughout the day, but that initial reaction looks good at least. So that's a good sign. So market has been slowly trading up in the overnight, probably because of that. And let's see if we if we're going to get a little bit of a rally out of it, or it's just going to be a kind of a dud. We'll see. And we have news this morning at 8:30. We get durable goods, we get GDP, and we get jobless claims, all at 8:30. We have a speaker at 9:15, pending home sales at 10, speaker at 10. These freaking Fed speakers, they're everywhere. They're all over the place. I don't know why they're out there speaking all the time. But they are out there speaking, and every time they do, they could, especially if they're in a decision-making position in the Fed, then they or a voting member, I should say, then they people pay attention, and they can certainly says create some news, inadvertently create some news, and that's the worst part of it. Anyway, so at this point, though, we're looking at the bigger chunk of news coming out at 8:30, and then we'll take it from there. All right. So video earnings we survived, I guess, at least for now, and the news a fair amount of news. Yesterday was also a pretty volatile day, but I would say we were not quite directional. We have pretty much cut off the selling. So yesterday we did not, as you see, we did not extend to the downside, so that's good. So we at least cut off the selling and going sideways right now. Let's see if they start retracing or if they're going to try to retest these lows at one point here. So we still have tariff threats, I think, on Canada and Mexico. That's coming up. It's those 30 days are going to be up here shortly, and that's anyone knows how that's going to turn, how that's going to happen, if that's going to be averted or what's going to happen with it. But those are the things which potentially could throw you a range, a curveball or something into the markets. At this point, though, I'm going to start off range bound. I think we cut off the selling yesterday, or we cut off the selling the day before yesterday. Yesterday was an inside day. And at this point, I would start range bound. I would look for potential retest of this upper area, see if they can, you're going to see some strength developing, and or if they are going to be kind of sitting here going sideways for a bit, consolidating. So I'm not going to rule out the short side of this yet. I mean, the 1 day stalling is just 1 day. They can certainly run it down here, test the lows, and potentially stretch it. So starting off range bound, I'm going to watch the edges and see which sides we may be trading on. So at this point, looking to get short against the 6,015s, 25s, 35s, up to the 45s, these areas of resistance. That would be this resistance area or general area of congestion. And on the way down, looking to buy against support as they start trading below that 59.70s. I would say the 59.60s, 59.50s. Move this guy up a bit. And move this guy up like so I can see the lower edges. Maybe too much. There you go. So looking to buy against weakness at this point against the 59.90s. Well, they have the 6,000. That would be pretty aggressive, but the 59.90s, the 80s, 70s, 60s down to the 45 to 50s here for support. Last one would be down at the 35s here. But looking to buy against these support areas because I mean, you see yesterday they looked like they were totally falling out of bed and they just got stalled right here at the 59.50s and they just defended it. So yeah, these areas are important. You just don't know which one they're going to defend. So you're watching it and you're looking for setup and a trigger. And remember that always look for that setup and a trigger before you pop on a trade. And if you're close to the edge, you can always have a tight stop and you don't have to lose a lot and if you're wrong on the trade. So yesterday, pretty good move to the downside, but that was stalled and traded back up again. And the overnight looks positive. So I mean, looking like we have been at least starting to trade higher in the overnight. But I mean, I'm going to start off range bound. If they can clear that 6,045 level on the upper end of this, I would be a lot more aggressive on the long side. I think that may be a good sign that the bulls are back in charge. If they start taking out that 59.45 to 50s, yesterday's low, I think we are going to be seeing a test of the 35s, and I think the bears are taking charge at that point. So always at the edges, look for that obvious run above or below the obvious. That is always that extra leg, which you kind of not quite think about. Yesterday we saw that on this little pop to the upside, right? The upper edge was at it for 15s yesterday, and they ran it one level above it. Pretty much not like clockwork, but it's sometimes they stall at the edge, sometimes they take it one level higher. But that's why I'm always keep saying one level outside the obvious. This is the obvious edge. Yes, it was yesterday. The one level above it was what ended up being a good edge to lean against. But I'm going to start off range bound, looking for early strength to see if they can retest these highs. But looking for short setups against that the 15s, the 25s, 35s, and 45s, 4 rotations back down again. And looking to buy support at 6,000. I would be aggressive. 59.90s, 80s, 70s, 60s, down to this 45.50 area. But these two support is going to be pretty strong, I think. So I would certainly look for support for long trades against them. If both of those comes out, the 35 comes out, when the bets are off, and I think we are heading back lower at that point. So we'll see. We're starting off range bound. Let's see what the market's is going to do here with the cross currents. The capital flow is still to the downside. That move out of the middle is just kind of shaping up. The big move out of the middle. Yesterday was the first day we had a holding day, which did not extend. So we're in stage 2, looking for a retracement trade, see if they can take it any higher. So that's why I'm looking for that early strength. And if they just kind of stall there, start going sideways, then we may see a few range-bound trading days. But and we'll just have to wait and watch the market and see what they're going to do. Alrighty, so that's the ES range bound start. Capital flow is leaning is on the short side, but so if anything, I would have a bias to the downside. But I'm starting pretty range bound, I would think, on the ES at this point, at least today. On the bonds, I rolled the bonds to the June expiration. All right, so that is, we're trading June expiration on bonds right now. They're pretty much backed off a little bit from the overnight, but not much. So we're looking at flight to safety looked pretty gnarly yesterday, right? Now they're backed off a little bit. We'll see if they keep retracing, take out that 117.05 edge, start trading below that. I think we have a shot at trading it right back down to this 116 area. But right now they're pretty extended to the upside. So you can see the bonds right here. They're pretty extended to the upside, and if they start backing off this attractor area, next attractor down here is going to be the 116.08. So they start backing off, it could be a sign that people are rotating back out of treasuries. Depending on what happens, though, I mean, it's a little bit fast, but you never know. When the market starts moving, it starts moving. And people which fled to safety may have to rotate right back in again. But at this point, looking at the potential, looking at the range-bound bond market, looking for early weakness given that overnight sell-off or overnight weakness, see if they can take out that 117.05 edge. And if they can't, probably going to stay in the range here. If they start trading above that 17.28, leaning in on the long side, looking for moves to the upside at that point. So that's the bonds, still way up. Yields pretty much on the downside, and that's not a bad scenario to be in. NASDAQ is the one I have hope for today. Given the NVIDIA's earnings and the fact that they didn't totally fall out of bed, we're either going to go sideways, or I think we may have a shot at trading higher. So I'm watching NASDAQ for a potential move to the upside. But I'm going to start off range bound. Capital flow is still to the downside. So you've got these cross currents going on. The capital flow is pointed lower. The exchange member chart is range bound with a slight bias to the upside given the news we have. So I'm going to watch it. And if they can trade up above this edge, the 400, 450s, I would be probably looking for a potential retracement trade, see if they can get back up towards that 760 to 800 level. We'll see. This is a big area of support of an attraction, if you wish, and pretty wide. You can see this big volume bulge going on there. That we have been down here testing that lower edge. We are rotating back up, and right now we have, I think, favorable enough news for that to trade higher. Now the news we have at 8:30 potentially could derail that potentially. But we'll see how much that Nvidia earnings report is going to lean on the market today. It's going to be I think a big part of that the early part of the day at least, to see how that develops. So starting off range bound, a slight bias to the upside given the earnings. But still looking for shorts against the 400s, the 440s up to that 520 or 510 level. If they trade up above 500s, I think we are on our way. So, but still looking for shorts against these levels. If they start taking out the 400s, well, probably at 445, I'm going to start thinking about that a long trade running it up to the 500. So that's kind of it. But it's looking for shorts against that 400 and the 440s for rotations down. Looking to buy weakness. Well, yeah. Looking to buy weakness at 250s, 210, 200 to 210s, 150s, 100s. If they start trading below the session low, I think that Nvidia earnings is not working well at all, and at that point we're probably going to see a retest of these lows, maybe lower. Still looking to buy against that 21,060, 21,000, 21,030 in the 60s for rotations back up. But if they start taking out the 150s here and the 110s, I think the sentiment is turning pretty negative at that point. It could be a technical, like an algo sell-off or something like that. But if they start taking that lower than that, I think you're going to probably see a pile-on effect on the downside. But I'm hoping that with the Nvidia earnings, you're not going to see that kind of a sell-off. I think that we may be done with the selling. We will see. But so starting off range bound, I would prefer to buy weakness, looking for early strength. See if they can run it up here and testing these upper areas. And still looking for short. The first two ones, the 400 and 440, a little bit more aggressively. But if they start taking out the 440s, then I think it could be a long trade in here up to the 500s, and then potentially look for a short trade up there. But above that, not going to be aggressive on the short side. If you're going to see a squeeze to the upside, probably going to begin taking out that edge and then just keep going. All right, so that's the NASDAQ. That's got all eyes on that, guys. See if they're going to be able to starts trading higher given the Nvidia earnings from yesterday. And then finally, oil and gold. Oil and gold. So gold, pretty good move to the downside in the overnight. So not surprising, but gold has been such a volatile animal. It's trading it in this upper range. You see that volume area, they've been down here testing that 28, all the way down here to the 2890s right now. That's your attractor area right there. And they bounced off it. So that was a pretty good first time to a high volume area bounce. That's exactly what happened. But this whole thing is starting to fill out right now. And you start seeing, if I do this, how this whole volume is moving around. And we have volume up here. You have a pretty good volume edge here down at 2880s. And a fair amount of TPOs here, but not a lot of volume. So a lot of time spent, but not a lot of volume traded here. So most of the volume has been on the upper edge. So would not to be surprised if we start seeing them filling out, going back and forth, filling out this area. However, if they start taking out that 85 edge, this volume edge, so this little small low volume area, start taking that out, we can certainly head down here, start heading down towards that 2850, maybe even start testing these other areas of this range where we kind of ran over on the way up. But not a lot of volume on the way up. It gapped up, took off, settled in. So I would not be surprised if they take out that 85s. I would be definitely on the short side, looking for a run down here to the 2850, maybe even look for a reverse retest of that 2800s. That would be one of those days you wish you were in on when it happens. All right, but starting off from the short side on gold, See if they can retest that 28.90, maybe take it lower. So looking to sell strength at 29.03s, the 7s, the 12s. If they start trading above the 29.12s, I'm taking off that short bias and going back range bound, looking for just them trading in this middle range. Could be a retracement trade in there, but at this point, I think the short bias is the early weakness dynamic you're looking for a retest of that low goes away if they trade up above the 29.12s. All right. And if they trade lower, looking to buy against the 97s, 94s, 90s. A little bit of caution on those if they start blowing through that or start testing those. Because it's that second test of the 28.90s could certainly be the one which takes it out. All right, so that's gold. You look for early weakness to retest that low. You look to sell against early strength if you see it. Above 29.12, take off that short bias. Go back range bound. And on oil, here we go again. Oil trading back up a little bit. So they're trading in this range down here at the 68.50s yesterday. Now they're trading back up a little bit. And I would just say that oil is in a, that's gold. That oil is in this lower distribution right now. They definitely, this move out of the middle from a few days back took us right into this area. Now they're building value here. So we are back in that range. So that will pop and then retracement is passed. And now we're looking for potential range-bound trading. I would think consolidation here for a bit, maybe even attempt to take it lower, but chances are we're going to be here for a little bit, building value, going back and forth a bit, and then trading. Hopefully trading lower. So looking to sell strength again at 69.50s, 69.80s. 70s for rotations back down. I think above 70s, we started retracing these single pins. So I'm going to be looking for a retest of 70s. If this starts trading above that, I'm taking off the short bias and going back more range bound or more thinking about maybe even higher prices. So short term, that can certainly happen, but overall, technically, the prices are going to be coming down. So I would be favoring the short side for a while on oil, and the long side just in the short term. So that's oil for us. Looking to buy against support at the 68.70s and the 68.50s. If they trade back down there, a little bit of caution, but looking to buy against those support areas as well. Oil has been pretty gnarly to trade. It's been pretty choppy, so I haven't really been looking too much about it. Gold has been very tradable, but super volatile. So it just lends itself to getting run over pretty easily. So be careful with that. So that's oil and gold. So trade gold from the short side to get started. Oil range bound. Looking to sell strength. Back to the ES, and so far, okay, we're holding where we left it. So let's see if we're going to get a little bit more strength out of this, or if you're going to see us this whole little overnight rally, melt down. We will see. I'm going to be hopeful, though. I'm thinking the NVIDIA earnings definitely is going to put some good support in the market. At least that free-for-all selling is going to be done with. So we'll leave it there. Let's see. Good trading, guys. And we'll go at it again. Good trading, guys. I'll see you back at 11:30 for the next update.